Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for April 22nd, 2024. Let's get started. SEAF signals for this week, we have new entrant financials along with our legacy industrials and energy. Industrials and energy are really kind of holding on from their tactical month and strategic quarter. We are seeing a slightly positive flow for the trading week for industrials and a very slight outflow from energy. A little bit more on energy in a minute. Just I'm going to highlight this on the chart, but this is a consistent kind of move for energy in terms of it kind of takes a little bit of a breather during its uptrend. But we'll show that a little bit more with the chart. Financials ripping and coming in strong at number two with a relatively strong inflow at 0.24%, still slightly below average that we're used to in terms of new entrants for flows, but still relatively strong. A little bit some other abnormalities in this week, and I'll show this a little bit more in the heat map. But consumer staples coming in at one with a 0.28% increase in terms of net flows for the trading week. And similar thing for healthcare coming in at third with a 0.21% net inflow on the trading week. There's not much to do there with either consumer staples or healthcare just yet. We are still in the neutral and then subsequently avoid ranking, but just key to note that we are seeing a little bit of shifting around in the overall table. That's now going into our heat map, showing our financials, like I said, at two. We are not in that normal clumping that I like to see. Financials showing all three green across, so is industrials. But outside of that, we kind of have a little bit of a smattering of green coming in to our avoids and our neutrals. So that's just something key to note. The other big thing is technology had the largest net flow, whether it be positive or negative. Obviously, with it ranking 11 in the weekly, showing a negative flow of 0.53%. So that little dip that we had last week in technology was appearing to be the last hurrah, as money is now flowing pretty aggressively out of technology, both on the tactical month and the trading week, with the strategic quarter actually being at a net zero for positive or negative inflow. It's at zero. So overall, when I look at this, this kind of shows me that we're starting to switch the guard a little bit. Nice to see financials up here and industrials and energy hanging on, but more to come in this space. We want to see, obviously, that consumer staples, healthcare, and financials can sustain. But obviously, with financials being the top C pick for this week, pretty confident there. Now on to our rainbow charts. Yeah, I mentioned earlier I was gonna talk to healthcare a little bit. This is kind of what I wanted to show. We did see this pop up out of from the deepest depths of the avoid to the uh, upper avoid area, and we did have a corresponding slight move in relative outperformance. But as you can see here, we've had this really broad trend in underperformance for healthcare. In 1 week, with a high trading week, isn't really going to move the needle all bit that much. So broader trend, something to keep an eye on though. Obviously, if flows continue and we can get up into this favored and neutral ranking, as we can see here, bounces off of that provide us some relative outperformance. Uh, and But in general, nothing really to do with healthcare yet, despite the strong week. Um, Industrials is still holding on strong. As you can see, we have this nice trend line in the relative outperformance, recently breaking this resistance point, now turning it into support. But we do have this nice trend in relative outperformance in industrials. We are seeing a little bit of wavering up in this favored ranking in terms of dropping off, but broadly still getting a nice line of relative outperformance for industrials, and with it still being positive inflow this week, still feeling pretty good about its long-term outlook. But again, we're not predicting cash flows here, so next week money could run out of industrials. But I like the momentum that we have here and this nice broad trend with our relative outperformance. Technology coming up to a key point in support on the relative performance chart. but not looking good broadly. Like I said, overall having a pretty quite a large outflow on the trading week, and then being among the worst in terms of the trading month in terms of cash outflows. Um, but this is a key chart to notice. So we're going to be keeping an eye on technology going into next week. I just want to see, does this bounce off of the support level, or is the market not see it? We run right through it. If we get another week like we did this week in terms of really strong net outflows, we're going to blow right through this relative outperformance support line. And, we've seen this before, right? So technology does have these weeks where we kind of dip into this avoid, and then we end up railing back up. We're not predicting that, but just looking at the charts, looking at the patterns that we've seen in the past. The reason I drew into this the support line is we've had similar moves prior where we dip into the avoid and then we rally right back without knowing exactly what the markets are going to do going forward. We can't predict this, but what we can do is just show what's on the chart. And like I said, we got support here in the relative outperformance chart as we've dipped into a void, but flows were pretty strong out. So, we're not predicting a rebound here, but it is a bit possible. Looking at energy, energy has kind of stalled out a little bit, still ranked in favored, still a SEAF signal. We did have a slight outflow in the flows, but as I mentioned earlier, kind of looking back to this uh, third quarter outperformance that we had, this is kind of what we saw energy do. It rallied, it took a little bit of a break, and then it rallied again, took a little bit of a break, and rallied again. With energy being a little bit slower in terms of its cadence than a technology or a consumer or a communication services, this seems to be a normal pattern for energy. As you can see here, we rallied up here with strong relative outperformance, dipped below, went a little bit sideways, kind of kept pace with market here, and then rallied again. So if we can get a really nice inflow next week after this thing had took its break, we could potentially see that relative performance shoot up a little bit higher. Again, without projecting what's going on, we don't have a projection outflow. All we can say is where the money's going and how it's trending. We are trending positively in the right direction for relative outperformance and have been for the last month or so. And, if we can get this similar pattern that we did in the third quarter, this thing will rally again, and we will get a little higher run on the relative outperformance. A good space to watch for next week. Looking into financials, financials is kind of rallying here, getting back after a brief stint in the neutral territory, kind of touching down into a void. We are getting it jumping up in the rankings, being the top overall ranked for SEAF. We are seeing that relative outperformance, but we do have this resistance line coming up that we've kind of sat on going back into December of last year. So just something to note that we are approaching resistance on the relative performance chart. This thing's been relatively sideways for the better part of the last year with some brief spurts of relative outperformance. So if we can maintain these flows coming in for financials as rates increase, this could be an interesting place to be. But broadly, money flowing aggressively into financials, seeing that turn on the relative performance after kind of being in this box for the better part of the last couple of months. Really we'll be looking for financials to break through this support line, or sorry, this resistance line with continued aggressive flows. Last but not least, similar thing to energy, consumer staples, uh, or not energy, similar to healthcare, consumer staples edging itself into neutral, but still broadly on this really uh, relatively steep relative underperformance on the bottom part of the chart. We would like to see, as you can see here, we do at times peak into favored after kind of foray into neutral, which does correlate with some relative outperformance. We see one here, and that spike coming in around here. So it seems for the better part of the last year that we do only get little spikes in staples, which is why we wouldn't want to bite on this too early. Broadly, we try to use this as a momentum model where we're not just trading on the weekly flows because we really can get whipsawed around on those as these flows kind of come in and out, but relatively strong flows for consumer staples, seeing that little bit of turn on the relative outperformance, but it's got this upper resistance line that it still has to try to touch. And we just haven't seen flows consistently stay into consumer staples. They tend to spike in for a brief moment and then come roaring back out. Again, not a C signal, but just seeing that relative outperformance peak on a weekly increased volume for funds flowing into there. Another space to watch as we could peak into favor going into next week with another strong flow. That is all I have this week. I look forward to breaking down the SEAF model with you all next week, and I hope you all have a great week. Thank you.